All right, gang, welcome back. Let's get into module number 2, getting your finances under control, part 1, how to stop the bleeding without killing the business. This is probably going to be one of our meatiest and most thorough and intense sessions, so you may be wanting to pause the video here and take some notes along the way. So we got a lot of ground to cover. Let's get started. So what are we going to cover today? Well, first of all, can your business be saved? We need to have a serious discussion of, hey, is this something that's worth saving, or should we pull the plug before we start pouring a lot of time, money, and effort into it? Then where is the break-even point in your business? Nothing else matters other than that. If you can't get past your break-even point, then why are you in business? The why and how of dealing with your tax issues. A lot of businesses that are in distress because of tax issues, and let's talk about that. And how are we going to turn your accounts receivables into cash in the door? Because it doesn't make any difference until you have the cash in hand. So let's get going today. So let's start off to review very briefly from the last session. In the last module we went over, are you in self-denial? And how are you going to deal with that? And hopefully you've been able to do a little self-examination on yourself and on your business. And what are the major things that you need to look for when self-assessing your business? So let's start off with, can your business actually be saved? So there's really 3 major areas that we need to look at in saving your business. Number 1, is your business in a stagnant or dying industry? I'll give you a good example. Let's say it was 1965 and you were in the cathode ray tube business and transistors started coming out in the market. You know what? That's a game changer. Probably not going to make it. Or let's say that you were a Betamax retailer and VHS started just taking over the market. Well, guess what? It's probably not very good for you unless you can totally pivot. So you have to be honest with yourself. Am I in a stagnant or dying industry? So then let's say that you are in a business or an industry that is actually has a great future. The second thing we have to look at is, are your debts too crushing to overcome? Can you actually truly within a certain time period be able to grow yourself and get enough profits and cash flow to get out of debt, or are they so crushing that there's just no way to get out from under that? Now the next point is going to be really key in that process. Will your creditors negotiate with you in good faith, or will they demand liquidation? Now obviously most creditors are not going to want to demand liquidation because they're going to get pennies on the dollar, and they would rather work with you to help you get your business turned around. Some creditors, though, are going to lose patience, and their idea is, you know what, we're done. We're just going to get as much money that we can from the business owner and run. So you have to really do a self-assessment. Are they willing to negotiate in good faith, or are they done? And the key point here is you have to be brutally honest with yourself. Now is not the time to look purely through rose-colored glasses. I've had business owners in the past that I've initially met with, and I had to be open and honest with them. You know, in my opinion, it's not going to happen, and that's not being negative. It's just being honest. And sometimes we have to conclude that maybe it's time to, hit the reset button and do something else. Hard as that may seem, but those are the realities and facts of life. So now let's talk about break-even point in your business. And as I said earlier, nothing is more important in this entire module than this concept. If you get nothing else out of this module, I want you to drill this module deep into your thought process as we go through it. Okay? So what is the definition of break-even? Definition of break-even is very clear. It's where your total revenues cover all fixed and variable costs for that period of time. So let's go ahead and define what are variable and fixed costs. So your variable cost, as it says here, is the cost that it takes to do a particular job. So raw materials, direct labor used to make the product or services, fuel for trucks, basically anything that you spend in order to actually get that job directly done. So then fixed costs are expenses that you must pay no matter how much or little revenue comes in. Here's a good example would be rent, telephones, administrative staff, insurance payments, tax payments if it's on a fixed agreement, whatever that is for you. So now there is a thing called a mixed variable cost, but we're not going to get into that today. We just want to keep it simple and figure out which of your costs are variable cost and which of your costs are fixed cost. So now let's take a look at what is the formula for calculating break even. So here we go. The formula for calculating break even is your fixed cost divided by your gross profit percentage. I'm going to explain this in just a second. Equals your break even. So here is an example. Let's say in a 1 year time that a business has $1 million in revenue. Let's say that they have $600,000 in variable costs. And let's say that they have $100,000 in fixed costs. So we can then calculate the break even. So this is what it would look like. You would have $1 million divided by 0.4 or 40%. Now, where does 40% come from? It comes from what we call your gross profit. So in other words, 400,000 of that. So you take 1 million minus 600,000 is 400,000. So 400,000 in this case is 40%. So your gross profit is 40%. You would divide it by 0.4 equals $250,000. Now this is your break-even point. Now here let's do another example here. So let's now calculate your break-even point on, say, a daily basis. So we can actually, this is a monthly basis above instead of an annual basis. Now let's calculate it to break-even basis on a daily basis. So now let's say that $250,000 a month is your break-even point for the month. So we divide that by 22 working days. That would mean that on a daily basis, you would have to have $11,363.64 required to break even. So one of the things that we need to do is establish, okay, how do I do that break even in my business? Now, rather than going through a whole bunch of gyrations, one of the things that I provide for you today is the break even tool in today's download section to do all of your calculations. It's simple, it's easy. I'll go through a quick demo. It's going to tell you so many things. So rather than overcomplicate it, you're going to love the tool. I guarantee it. So now the next thing we need to look at is we need to have you deal immediately with your tax issues. Now, ignoring the IRS or state tax agencies will never work. Well, duh, of course that's the case, but you would be surprised how many people in distress think they can get away with it. But as I talked about in the very first introductory session, if you ignore a problem, it will just get bigger and bigger. You can't do that. So now what we need to do is do not, and I repeat, do not try to negotiate with them yourselves. Think about this. This is the equivalent of putting a 12-year-old boy in the ring against a heavyweight boxer. It's a total mismatch. I can't emphasize this enough. I've seen too many business owners over the years who try to negotiate directly with the IRS and it never works out. So what is the solution? Well, the solution is you have to use an enrolled agent. And you're probably asking me right now, Kevin, what the heck is an enrolled agent? Well, I'm going to tell you. An enrolled agent is an accountant who is trained and certified to represent you, the business owner, in front of state or federal tax agencies. They are basically, in essence, your paid and trained pit bull to basically stand up and defend you against the IRS or state tax agencies. I've worked with a number of enrolled agents. It's amazing what they will be able to do on your behalf. Now, you're probably thinking to yourself, right, sure, Kevin, I don't have any money to give. How am I going to pay an enrolled agent? Well, here's the question. What if you don't? You're going to be in a bigger world of hurt. So how are you going to find an enrolled agent? My recommendation, you go to the website, National Association of Enrolled Agents, www.naea.org. There you can go ahead and find one that's either closest to you or the one that fits your needs the best. I would definitely recommend that if you've got tax challenges right now, you go do that. If you have a CPA you're working with that you're comfortable using, fine by me. All I know is that you're going to get the best results if you use an enrolled agent. So let's talk about how are we going to have you turn your accounts receivable into cash in the door. Because here's the biggest thing, and this section isn't really going to apply to cash-only businesses that don't put out invoices and get paid in 15, 20, 30 days or so. I want you, for you though that are out there doing invoices, I want you to keep this in mind. You are not your customer's bank, so stop behaving that way. I have had too many clients over the years who basically would not work at collecting their accounts receivable because they were afraid of making their customers mad. Well, wait a minute. No, you're in business and you need to be treated that way, not be just that you're some bank for these people. So let's talk about how am I going to start getting more money into the door from my accounts receivable. Well, the first thing we need to do is what I call dialing for dollars. You're going to have to basically get your accounts receivable list. You're going to have to look at it, and any accounts with over 90 days past due, you're going to have to pick up the phone and start calling and start collecting, as harsh as that may seem. Now, for some of you, you may have a fear factor or over conflict. And you know what? That's okay, but sometimes you're just going to have to work very hard overcoming your fear and make that first call. And maybe it won't go exactly the way you want, but I can tell you right now, the more you do it, the better you will get at it. The second thing is you need to get a credit card number from them to make payments make the payment if you have to. You know, they may not have that cash right now, but if you can get them a credit card number, that's a starting point. And it might be good for them to set up a payment plan to get their account back in the line. And you can use that credit card to do the automatic payments. You need to send them to collections as a last resort. But don't be afraid if you must. Nobody wants to send somebody to collection, least of all me. But at some point, you have to basically be respected, and if you have to do that last resort process, sending them to collection, well, so be it. So a bonus tip is that you need to eliminate the current 1 to 30, 30 to 60, 60 to 90, and 90 plus boxes on your invoices. Now, why would you do that? Because psychologically, when somebody sees that block in there, they go, oh, you know what? Yeah, I can go ahead and just kind of get away with letting things slide into the 30 to 60 or the 60 to 90 day block. It's a psychological thing. If you eliminate that block, that eliminates that psychological blanket that they have, and they have a greater inclination to pay you on time. Now, it may seem funny, but I've had clients who have done that. It's amazing how much more effective they have in collecting cash when they eliminate that on their invoices. So bonus system that I'm going to give you guys is the Action Coach Collection System in today's download section. It's got a whole process with scripts and letters and such that you can use to start bringing dollars into your door. I think you're going to like it. Now the key point is you have to remember you are a business. You're not a charity. So start behaving like one if that is the case. Now, the biggest rookie mistake that I find in this area is that passing over finances because you think other things are more important. Ladies and gentlemen, I'm going to be straightforward with you. Nothing else is more important in your business right now than getting control of money and bringing money into your business. Yes, there's other things that are also very important, but think about this. Money is sort of like what fuel is to a car. You can have the brightest, shiniest car in the world, but if there is no gasoline or fuel in the tank, it's not going to go anywhere. It's the same for your business. And so we have to make sure that you have money, i.e. fuel in the tank of your business so you can keep going. So let's wrap it up today. So I want you to take some time to figure out where is your break-even point. I'm going to highly recommend that you use the tool that I've provided for you today. You need to immediately deal with the tax issues if that is a problem. And if not, again, I would still work with someone who can make sure it won't be a problem. If you're not working with a CPA, find one. If you're working with a CPA and you need an enrolled agent to deal with the IRS, then do it. But at least be proactive. And finally, get your customers to pay you ASAP. If you've got outstanding balances, start dialing for dollars. Use the collection system that I have included with this module today. Nothing else is more important than getting that cash in the door. So, in the next module, we're going to work at getting your finances under control part 2. So we're going to start putting a financial plan together without freaking out. You know, a lot of people will go into freak out mode when they deal with this kind of with money. Well, you don't need to. So we're going to talk about starting to sell stupid stuff off. It's a lot of stuff that you probably have in your business that really doesn't belong there anymore. How are we going to sell it off? Employees. Do we keep them or do we get rid of them? Which ones do we keep or get rid of? The dreaded B word, budget. Yes, you're going to put together a budget. If you haven't put together a budget, yes, I'm going to provide you some tools, but we're going to put a budget together. And then where you should and should not cut expenses, because not all expenses are created equal. So we're going to talk about that in our next module. So now it's time to get into action. Start putting together your financial plan. Use the break-even tool. Use the collection system. Start making that happen. And I look forward to seeing you on the next module.